Today, we got what's called a relief rally, or maybe it was a dead cat bounce in the overall market, the S&P 500, and including the Dow Jones Industrial Average. But the question is, will this last, or is this just something to suck us in and then the market is going to continue lower? Let's talk about it. Let's look at some of the headlines that came out today because we got a major rally in the market, but towards the end, the rally started to fizzle. If you look at this headline right here, volume and stock and oil futures surged minutes before Trump's market turning post. So Donald Trump posted on Truth Social that they were working on a deal with Iran and that they agreed to delay the strikes on the Iranian, I think it's their like energy plant and infrastructure. You can see here oil tumbles nearly 11% after Trump puts on hold US strikes against Iran's energy infrastructure. So if you haven't been paying attention, we said we're going to give them 2 days to open the Strait of Hormuz. And if they don't, we're going to strike their energy structure. We already backed down from those statements and it hasn't been 48 hours. He's going to give them to the rest of the week and give them 5 days. And then you can see here stock futures are a little change after Monday's relief rally as traders eyed the latest developments in the Iran war updates. So here's the thing. Just to think that we are not going to escalate the war any further was enough to send the markets surging. The S&P 500 was up over 100 points. We'll take a look at the chart here in a minute. What I want you to take away from this is that this is an indication of what can happen once we end this war, because no war goes on forever. No different than the pandemic didn't go on forever. So let's take a look at the overall market, or let's just take a look at the S&P 500, which is the top 500 stocks. We might look at the Dow as well, but I want to focus on the S&P 500 here because I think it's very interesting when you look at what's going on in the market. This sideways pattern here, just kind of doing nothing. So if you pay attention to the news, it will have you thinking like the world is ending, the market has crashed. But technically, if you look at, if we draw a line from here to here, the market is basically in the same place that it was November 20th. If we drill down intraday, you can see that intraday, this is where the market opened. And then this is where the market ran up to the high of the day. So we gave back the high. We backed off the highs, but we pretty much held this open. If we draw a line pretty straight across, obviously I'm freehand drawing this, but we closed roughly right where we opened at the beginning of the day. I'll take that as good news because we didn't gap up, run up, and then come all the way back down and close that gap. So we at least held on to the open and bell gains. But what this is telling me though is some people use this as an opportunity to offload some stocks at the high, but also some people use this as an opportunity to get into the market. But there was definitely some unloading of their stocks at the high. Now, when I take a look at this and when we talk to our traders inside the university, here's what we want to be thinking about. There's a couple different things. The market overall is definitely off its high. And the question is, do we get a bounce and the market goes back up as we try to kind of break through the 7,000 point level? Or do we get a breakdown and the market falls lower? And then the question becomes what? Well, how much further can it fall? If you look at a lot of the tech stocks, they've already backed off 10, 20, some 30% off their highs. And so the question starts to become, how much further downside do we have? If you're looking at our levels of support, right now we are at an inflection point because this point so far has yet to be broken. It wasn't broken here. It wasn't broken here. It wasn't broken here, not yet, although it looked pretty grim Friday, decent sell-off. But today we got a little bit of a relief rally. I don't think that is cause for us to run back into the market yet, but I do believe a bottom may be near. Now, here's what could stop the bottom from being in. Number one, in 5 days, if Trump decides, you know what, these guys didn't open the Strait of Hormuz, we are going to escalate this war and we're going to bomb their energy infrastructure. Here's why I think that still may be happening, because they asked for, I believe, something like another $2 billion or $200 billion. I'd have to look up the figures, but they asked for a lot more money to help fund this war. You typically don't ask Congress for a lot more money if you think this thing is going to end sometime soon, unless it is just a ploy to say, a media ploy to say, hey, let's ramp up our boats, our planes. We're about to put troops on the ground so that we send a media signal to them that we're not playing and we're getting ready to amp up the war, in hopes that they say, don't let them do this. Let's just open the strait. Let's see if we can work out a deal. Although I wouldn't expect the president to just get on TV and publicly show his cards and tell us what he's doing, as if the Iranian people or regimes can't watch the news and figure out what's going on. So you got to take everything with a grain of salt and understand that we'll always be in the dark a little bit as to what's happening with this war, with the strategy, because otherwise, how would we get the upper hand if we just told all the Americans what we're going to do and then they just wait for us to do it or not do it? That really wouldn't make sense. So some of the stuff you have to be a little bit flexible with the president, with the powers that be, to see how this is going to shake out. But you also can use the charts to read between the lines and say, even with this war going on and getting where it's at, and with oil prices being where it's at, the market kind of hit its brakes. It paused at this key level, still paused right here, and we got a little bit of a bounce. And so I would anticipate that we're going to see more volatility this week, because guess what? Everyone's going to be waiting for what now? Everyone is going to be waiting now for 5 days, which is going to lead us maybe to Friday. And we may see some extreme volatility Friday or some extreme volatility Monday, depending on if the demands aren't met by Friday and we do decide to strike over the weekend, or if we open up Monday and there's a tweet saying, we're done playing, it didn't get open, we're going in, we bomb, or we've already bombed them over the weekend. So the market could open up sharply lower next Monday, or it could open up sharply higher next Monday. That's what I would anticipate, unless somehow we get some talks or we get some type of deal leading up to Friday. But come Friday, it'll be 5 days. And now we'll have to see, are we about that action? Or was this just tough talk? Or do we find some way to spin it and give them more time? What I would be doing right now is taking a look at the overall market and asking myself a couple questions. Number one, I would be asking myself, what stocks have been beaten down, sold off, that I should be considering buying at these levels? The reason I say we should say when, you can zoom out and you can pick whatever crisis you want to pick. You can pick Liberation Day. You can pick COVID-19, when we had this drawdown right here. You can pick this little sell off right here. You could pick the tariff, beef, and Liberation Day right here. What you will notice in all of these after these red zones is that what? We typically come out of it and we start the next bull run. So what does that have to do with right now? Let me just draw these back. What that has to do with right now is we may be in for a little bit more of a pullback, maybe. Again, we won't know till possibly Friday. If we do, let's just say we could break and come down here to the 6,000 level, potentially. There's levels in between there, but I'm just trying to measure it according to 1, 2, 3. And then after that, we may get that explosion out, depending on what's going on with the economy, what's going on with the war, how long it lasts. What I am simply trying to share with you is that long term, the market goes higher. And as the market pulls back, be it due to war, be it due to inflation, be it due to The economy, it serves as a reset for us to look for stocks that have been beaten down and that we really want to get into, because as the market rebounds, a lot of these stocks will rebound and take the S&P 500 with it, and along with it will come some of your profit and some of the greatest wealth that you've ever made. So don't panic, don't be fearful, but I want you to be thinking about opportunity. I remember when 2008 in the real estate market crashed, a lot of people bought houses, and there was a lot of people that's like, don't buy houses, they're going to zero. But people will always need a place to live. And now everyone's like, I wish the housing market would crash again so I can get houses that cheap. Similar to the stock market, when we have these pullbacks, or if you want to call them small crashes or 20% drawdowns, you want to be ready, because you're going to be looking back like it was 2020 or Liberation Day or any other previous event. And you're going to look back and you'll say, I wish I would have bought some stocks or invested in some of these great companies when the prices were lower. Let me know in the comments, what stocks are you looking at and thinking about picking up as the market starts to turn around and rebound?